Hello, friends. Today we'll discuss the beginning of accounting, that is, basic of accounting, and the first step of accounting. In accounting terminology, it is called as journal. Right. So the question arises, what do you mean by journal? Journal here is refers to a primary book or a basic book or a first book in which all the transactions are recorded in a chronological order. What do you mean by chronological order here? Recording of all the transaction is fine. But here, what do you mean by this chronological order? Chronological order here refers to as and when the transaction takes place, it will be recorded in the books of account without any delay. That is refers to chronological order in a sequential order without any delay, by keeping all the transaction as and when they takes place in a sequential order. That is called as chronological order. So journal is a primary, first a basic book in which all the transactions are recorded. We don't discriminate, we don't divide, we don't segregate the transaction based on its nature, based on any other factor. We record all the transaction without any segregation. That is called as journal. Though the transaction may be of capital nature, revenue nature, real, personal, now whatever it may be, it will be recorded. Provided, the most important thing you need to bear in mind that we have discussed that while discussing the concepts of accounting, that one of the most important concept, money measurement concept. The transaction must have a monetary value. A transaction which do not have a monetary value, that cannot be recorded. So all the transactions which have a monetary value are measurable in terms of money will be recorded as and when that takes place. That is called as journal. So in the process of recording journal, and we use here the double entry concept. The What do you mean by this double entry concept? Double entry concept is refers to here every transaction, every event happening in the business will have a twofold impact. What do you mean by this twofold impact? One is a gaining impact, another one is a losing impact. Suppose we are going to a shop, by applying 10 rupees purchasing a pen. In the sense, what we are losing our precious money of 10 rupees, at the same time we are gaining a pen which can be used for writing the what we call writing purpose. So here what is happening? Going to a shop and purchasing a pen is a transaction. This transaction is involving a twofold impact, that is gaining and losing impact. So here recording both the aspects of the transaction, that is gaining and losing, is called as double entry system. So whereas what do you mean by single entry system? Single entry system is refers to only recording one element of the transaction, that is cash is coming in or cash is going out. Why it is coming in, why it is going out, that will not be recorded in the single entry system. But we are concerned with not single entry, we are concerned with double entry. So we are using double entry concept for recording the transactions. Clear? So when we record the transaction based on the double entry system, here we use the two words. One is debit and credit. The question arises, what do you mean by this debit and what do you mean by this credit? According to the famous and reputed books, it is explained that debit is refers to what we write on the left hand side, credit is refers to what we write on the right hand side. But here the debit and credit is refers to two technical terms will be used to record the transactions. In the sense what? We record both the elements of the transaction, that is gaining element and losing element, that is recording both the aspects of the transaction, gaining and losing. For that purpose we use two technical terms called as debit and credit to record those two elements of the transaction. So debit and credit specifically do not have any meaning, but these words will be used as a technical terms to record the transactions. So here we use debit and credit, two important terms. And the next is, once it is done, here the traditional approach we have, that is dividing the accounts. Here the accounts are divided into three categories. Accounts are divided into three categories. One is real, nominal, another one is personal. Real, nominal and personal. What do you mean by real? Real is refers to whatever it is having a real existence, though it may be tangible or intangible, which comes under the category of real. Building is a real account, cash is real, furniture is real. Whereas these are the tangible items just now what I told you, whereas intangible such as goodwill, patents, copyrights, these all also comes under the category of real, because though these items do not have any physical shape, but these items will have an economic value. Then what do you mean by personal account? Personal account is refers to any transaction related to the person. Persons are two types: natural person like you and me, human beings, and artificial person which are created by law. Natural persons like any person, human beings comes under the category of natural person, whereas artificial person, companies, banking companies, then insurance companies, then any other business organization, whatever transaction takes place with those people comes under the category of personal account. Whereas what do you mean by nominal account? Nominal account here refers to all expenses and losses will be comes under the category, expenses and losses and incomes and gains comes under the category of nominal account. So this is the basic fundamental of the traditional approach of the real, nominal and personal. Here we have given some rules of writing the transaction with regards to debit and credit. In case of real account, the rule of debit and credit is in case of real account, the rule of debit says that whatever debit, what comes in, credit, what goes out. So in case of real account, whatever things we are getting in, that should be what we call debited, whatever we are losing, that should be credited. In case of nominal debit, all expenses and losses. Credit, all incomes and gains. In case of personal debit, the receiver. Credit, the giver. So these are the basic rules of debit and credit with regards to what we call real, nominal, personal. Right? And bear in mind, whenever you are recording the transaction with regards to business organization, as we have already discussed in the business entity concept, that business is different from its owner. Business is different from its owner. Business have separate legal entity and owner is separate person. So whenever you are recording transactions in the books of any organization, you must presume, as a student, you must presume that you are recording the transactions of the business. At the same time, you must consider and presume yourself that you are the accountant of business. You are not the accountant of owner. Owner is a different person. You are the accountant of whom? The business, which is a separate legal entity in the eyes of law. So, as an accountant, you must consider the transactions, and based on that, you must record the transactions. Clear? So, we have a format of ledger journal. So, how to record the transactions into the journal? So, there is a format of journal. So, the format is containing the columns, right? So, this is, suppose, journal entries in the books of X business. So the columns are date, then particulars, LF. LF stands for ledger folio. So the continuation of the journal will be the ledger, where we will record separate transaction in the separate books, in the separate accounts. So that account number, that book number, that page number is called as, here the page number is called as ledger folio number. Right? While discussing the ledger, we can have a elaborate discussion regarding this. Right? Then debit amount, credit amount. This is the general format of the journal. Right? So here, bear in mind, whenever you are recording transactions, you must presume, you must feel that you are the accountant of a business. You are not the accountant of a owner. Owner is different, business is different, right? Suppose if you take the transaction like received, invested money, suppose X started business. If you write a transaction like X started business with cash, let's say rupees 1 lakh. First transaction is taking place, that is X started business with a cash rupees 1 lakh, the transaction. Generally, the student always will have a doubt, how come the capital, that is investment made by the entrepreneur, will become a liability? Most of the students, like while I was teaching to a number of a different level of students, they raised the question, sir, how an investment made by the proprietor, owner, will become a liability? So to make this point clear, you must bear in mind that the business entity concept you must understand. That's the reason why the concepts of accounting you must understand perfectly to understand accounting perfectly. So in the eyes of law, business is different, owner is different. So as I told you in the earlier explanation also, that we are the accountants of the business, not the accountants of the owner. So what business will feel, that business is getting the money in the form of what? Capital. In the form of capital, and that money will be used by the business in a proper way. So the first transaction is So cash is a real item that should be recorded. So here, as an accountant, what we are getting? We are getting cash. So the writing procedure of entry would be cash account A by C dot 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 DR is refers to what? We are debiting this item. So cash account data, how much we are debiting? 1 lakh rupees. This cash, why we are receiving, how we are receiving, in what form? In the form of capital, to capital account, that is credit. So what the business is presuming? Business is presuming that whatever amount received from the entrepreneur, rupees 1 lakh, is a liability for him. The business has to utilize this money properly to do the business and give in return the profits to the owner. So for businessman, the capital is a liability always. And we are recording transactions with the view of the business, not with the view of the owner. Though this capital, this amount is an investment for the owner, but we are recording with the perspective of the business. Hence, it is a capital. Therefore, the entry would be cash account data to capital account. Then we write some narration. Narration is refers to being cash bought into the business, or being cash introduced into the business. This narration plays an important role here. Narration is not an ordinary thing. It is a very, very important thing. Students sometimes feel that this narration is not so important. They leave it blank. So narration will make the people understand what is exactly happening in the entry. Sometimes what will happen, two entries would be different. Two entries would be similar, but the narration distinguish or divides the entries, bifurcates the entries. So narration plays a very important role. Whatever happening in the entry, that must be represented, that must be written in the narration. That is whatever happening in that, is that being cash brought or being cash introduced into the business. So narration is very important. Suppose if you take next transaction, see, generally while writing this transaction, the student will raise a question, sir, remembering these three formulae like real, nominal, personal. Debit what comes in, credit what goes out, debit all expenses and losses, credit all incomes and gain, debit the receiver, credit the giver, would be difficult for us. Sometimes we may not divide the accounts into these three categories: what is real, what is personal, what is nominal. Student will raise this kind of a question. Sometimes it will make difficult for us to understand the student. Hence, in order to overcome from this difficulty while what we call writing the transactions, while passing the journal entries, I have developed a simple one logic. While writing the transaction, we must bear in mind, we must see the three applicabilities that I have what we call created with the help of my experience. Applicabilities I have created. So instead of remembering all the three formulae and dividing that into